Hi, this is Drew Tignanelli. This is our end of the year update. I'm here with Tom Bonvissuto, who's the Director of Investment Research. And Tom, we have an interesting situation at the end of 2013 because we've got all these new taxes. 3.8% Medicare tax on unearned income. First time ever that we've had payroll type taxes on investment income and investment gains.
Right.
We have a 20% capital gains rate for people with a high income, and we have a new 39.6% income tax bracket. So all taxes went up. So what are we going to do?
Well, it's what we're going to do and what we have done. We've already started to take some tax losses.
We normally didn't do that because we didn't think that the tax saving was worth it as opposed to the economics of what we were doing. But this year it's getting different now.
That's right. And as you know, we talked about the wash sale rule, that if you sell something at a loss, in order to really recognize that loss, you can't buy that same security back or substantially equal security back within 30 days.
Okay.
So there's a 31-day period gap, but you can swap into something else. So for instance, in some portfolios, we swapped from one technology company into another technology company. One that had some losses in it, and another one we thought the opportunity going forward was going to be good. So we made that swap between those two companies, and that was a way to maintain the equity exposure in the portfolio but recognize some losses for clients to help minimize some of these new taxes.
Yeah. Well, one of the questions I get asked by some clients is they say, we seem like we've been trading a lot. Well, number one, you just came onto the firm about 3 months ago, and so you've been really focusing on developing the portfolios in a more organized way, let's put it. Because before we had a team of people that were, diversified in other things. Like myself, I was one of the main investment people, and I was running the company, doing most of the financial planning, doing some taxes. And now you're here focusing solely on the portfolio and looking at things and saying, we need to massage this way or that way. So we're making some changes.
Definitely. And, like you said, there's been a lot of great things done in the portfolio, a lot of structure that's been put in place in the past, but I'm spending 90% of my time, at least, focused on the investments in the portfolio. And there's some managers that have done a great job, some managers that, we want to make some changes on. So that'll cause some things as well. So we may also do some fund swaps or fund tax loss selling in the last couple of weeks here as we wrap up the year.
Yeah, well, as our firm continued to grow, it just got to the point where you can't, as an individual, continue to run everything. And so that's why we've brought great people like yourself on, and you've done a great job, and you have the talents and the ability to continue to massage that portfolio into what our theories are in risk opportunity and so forth. And so you've done a great job on that. And that's why people are seeing some of this tax loss selling, because we got these new tax laws. And we've got you now focusing on the portfolio full time. So give us some thoughts for 2014.
Well, it's interesting. This morning I was reading an article, and it said, why does Wall Street and Main Street see the market differently? And the next subtitle of that article was, half of Americans think the market is down this year. Half of Americans think the market's down this year
when we've had probably one of the top 5 biggest years in the history of the stock market.
Exactly. It's the best returns we've had in over a decade. And now, unless they're talking about the bond market, because the bond market is down. But that's not what they were talking about. They were talking about the stock market. The S&P is up about 25% this year. Now, the bonds in the portfolio generally taking things down. They're down about 1.5%.
Right.
Kind of normal aggregate bonds. So that's an interesting thing going into 2014. And we have a fairly fragile economy still.
Right.
Right now the Fed is meeting today and tomorrow. There's a big question: are they going to taper? That means, are they going to reduce the amount of bonds they're buying back and putting into their portfolio? So they're supporting artificially the bond market, keeping rates low, helping mortgages to be at low rates, continue the housing market, and the like. So going into next year, there's a high expectation that they're going to cut back on that buying. And that is going to force rates to kind of just lift higher. Now the question is how quickly they're going to move higher. if you look at when the taper tantrum happened back
Right,
in May,
they call it.
we saw rates go up about 1%. So that's when they just talked about doing it. So when they actually do it, the question is, will the market do anything, or will it continue to move higher? So, I think...
Which typically the market's already discounted the tapering in a large way.
Exactly. So, I don't think the 10-year, which is right now at around 290, 285, 290, is going to be much higher than 3.25%, 3.5% next year, unless they really, have some unusual things happen. Because, we still don't have inflation, and they don't want to cause us to go the other direction.
Right.
And one of the things we're seeing is, there is inflation. It's just not coming up in the numbers. Because, one of the things we've seen, small companies have seen this especially, but all companies, is the cost of healthcare. And that's really been the wild card here.
It's the healthcare issue is an incredible problem. Incredible problem. I mean, we're experts, and we haven't been able to really figure out what to do in our own company.
Yep.
And we have constantly having clients call us and saying, "What do I do? What do I do? What do I do?" And there aren't good answers. It just takes a lot of time to look at lots of different sources. That's what you did in our company. We came up with our company plan, but you and a couple other people in the firm went out and still had to look to see were there other better options, and you found something on the exchange. But it wasn't like it was a great option, but it was better than what other things you had available. It's amazing how healthcare is going to affect this economy next
the
year.
problem is we're both getting older.
Right.
Every year you get older, it costs you more. I've got 5 kids. These things cost more, and it's been unbelievable. So, that has to change, but that has going to have a bite into the consumer spending, the consumer feeling about things. We have the lowest rating for Congress in history. The president doesn't look too good right now in terms of his rating, and so those emotional things affect the market a lot of times. Now, earnings have been pretty good with companies. Corporations are still spending. There's a lot of new technologies coming out. We're seeing manufacturing shift back to our country. We're now going to be energy independent, perhaps, with all that's going on with oil and gas and that in our country. So those are the good things, but the consumer's still a little cautious going into 2014. And the market has likely gotten a little bit ahead of itself. I wouldn't be surprised to see a 10, 15% correction sometime next year. However, all things being equal, that might be an interesting opportunity to add back into the market a little more.
So in essence, the conundrum continues that you can't get hog wild bullish and you can't get hog wild bearish. It's just going to have to plod along. So anyway, I'm joined now by Derek Karastamatis, and he's the head of information planning, a good Greek boy.
Yes,
Did you bring any baklava for us?
I did not, unfortunately.
How about ouzo?
After the taping.
All right, after the taping. You'll be more relaxed then after you drink the ouzo. Anyway, this year end, and so there's a lot of issues that clients have to get their RMDs, required minimum distributions, right? And we've taken care of most of that, haven't we?
Absolutely. We have a list. We're checking it twice.
All right, and so there's a big penalty, 50% if somebody doesn't get their required minimum out by the end of the year.
Absolutely. It's a big deal. We pay a great deal of attention to it, myself and Christopher. We're doing a great job of making that list and making sure we reach out to all the clients.
And then you also have gifting of stock to charity. A lot of people like to do that because there's a big tax advantage to gift appreciated stock.
Absolutely.
When do they have to notify you that they want to do that? What would you say is your deadline?
So our deadline.
Don't call me on December 31st, right?
Do not call on December 31st. If you do, we'll do our best. We call that the best efforts attempt.
But if
we try
it won't get done by then.
The 23rd is our deadline, which is actually going to be the next Monday.
Next Monday.
Yeah, so the idea is it'll give us some time with the holiday break to process paperwork, get any paperwork to you that may need to be done. So it's just a deadline that we'll use to make sure that we can get everything wrapped up.
And if people want to adjust their their 2014 distributions for some reason, either they want more money or they have to take out a larger amount next year, Well, how soon should they let you know so that the January one is adjusted properly?
They can let us know as soon as they'd like, especially if they've already taken their distribution. We can go in and make that change. We can do it as late as early next year. We will have to do that RMD adjustment, and that won't be calculated until the year end. So, depending on your situation, you can call us whenever you see fit. That's a much easier situation, no paperwork required, unless it's your first time. So, that's a thought.
Well, this isn't really your category, but if somebody wants to take a tax loss and sell a stock, they have to do it by December 31st.
Yes.
So it doesn't have to actually settle.
Correct.
It can just be traded.
Absolutely.
And so they're gonna meet Jeff Will in a minute as they go through this office and see everybody, and they'll say hi to you. So anyway, Derek, appreciate you being with us, giving us a year-end information. That's the end of our wrap-up for the end of the year. This is Drew Tignanelli saying God bless.
Hi, this is Derek Karastamatis, Information Planner with the Financial Consulate. Have a happy new year. Best wishes in 2014. Hi, Mom.
Hi, this is Mike McCarthy, Chief Operating Officer, wishing you and your family a Merry Christmas.
Hi, I'm Chris O'Shea, Information Planner here at the Consulate, wishing you and all your family a very happy holiday.
Hi, my name is Molly Burton. I'm a paraplanner at the Financial Consulate, and I want to wish everyone Merry Christmas and a Happy New Year.
Hi, I'm Tom Bonvissuto, Director of Investment Research. Buon Natale e Capodanno.
Hi, I'm Sue Slowinski, Director of Tax Planning here at the Financial Consulate, and happy holidays.
Hi, I'm Chuck Bender. I'm the Chief Financial Officer, and I just want to wish everyone a Merry Christmas.
Hi, I'm Graham Ewing. I'm a paraplanner here at the Financial Consulate. I just want to wish everybody a happy holiday.
Hi, I'm Jeff Will. I'm the Portfolio Manager, and I wish you a Merry Christmas.
Hi, this is Drew Tignanelli saying God bless.